I think it's funny that everything is just about how you perceive it. So, for example, the interest rates actually dropped by almost a half a point over the past week, and it has created a big stir in the housing industry because people are much more incentivized to buy a house or get under contract right now. So essentially, today is November 18th. Our interest rates as of yesterday for the average 30-year fixed rate mortgage was at 6.61%, whereas literally just the week before we were at 7.08. And we've basically been hovering around that 7% for the past few weeks then. So, everybody's clamoring over 6.61% now. And I think that as long as you can afford the house and it's the right house for you, to, you can't control what interest rates are. So if you need to buy a house, whether it's due to life circumstances like you're having a baby, you are going to be an empty nester, maybe there was a death in the family, you have a job change, whatever circumstances there are where you need to move, or even if you want to move and you could still just afford it, and you find that house that fits your needs, um, you could always buy, and then if rates go down in the future, you could refinance. That's the great part about a 30-year fixed rate mortgage. It's kind of like a ratchet set where you could turn things one direction only. So if interest rates go down in the future, you could refinance and take advantage of interest rates going down and your monthly mortgage payment going down with it. If interest rates go up in the future, well, you're fixed at whatever rate you closed at. So that's a really cool part for that 30-year fixed rate mortgage. So don't think too much into it. Um, Again, everything's all about perspective, anyways. I'm looking at just the data from the 1 year mark, and sure, it dropped a half point from last week, but at the beginning of the year, we were at 3.1, which was all time lows. Um, for example, if we go to the entire chart here for what they have, um, it was at 7.25 or higher from 1971 all the way until, looks like we had a little blip there in 1983 or 1993, sorry. 1994 we were still around 7, and then we really didn't start seeing numbers dip below that too much until you start hitting it. We had a recession here with the tech bubble there, or the dot-com bubble, and then they start going back up. You still see sixes throughout, and then we hit our great financial crisis, the great recession that we have here in 2008, and basically housing was in trouble there, so they had to artificially create demand by lowering interest rates from there. So yes, it's been low essentially from 2009 through the all-time lows of 2021. But with us being at, 6.61 right now, really, like, that's what we were at for 40 years, basically. So everything's all about perspective. Keep that in mind. Don't go out and buy something that doesn't really make sense for you just because you're afraid that interest rates might be going back up. And on the other end of the token, don't wait for interest rates to get back down to 3% to buy again, because otherwise you're likely never going to buy a house again. So just my thought of the day. This is Caleb Barney with Russell Real Estate. If you have any questions and you're looking to buy, sell, or invest in Northeast Ohio, feel free to reach out.